Hey fellow investors and fellow stock guardians, it's Thursday, January 28th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a barely green stock market. All three indices started Thursday on an upward trend and gained more than 1%. However, by the end of the day, they've lost almost all the gain, but still managed to stay above zero for the day. The US fourth quarter GDP report came out and it was lower than expected, and once again, economic indicators prove that the overall economy is struggling despite the stock market's giddiness. On to the stocks, shares of a new IPO called Hims & Hers Health Inc. were up more than 27% on Thursday. The first time I learned about this company was through its creepy TV ads showing a guy taking some sort of a pill out of a neatly packaged single-dose pack, and that was it, leaving me hanging what the pill is for. Later on, I learned the company was gearing up for its IPO, and the pill turned out to be an erectile dysfunction pill. Okay, that was back then before the IPO. Yesterday, after the IPO, I noticed ARK Invest picked up shares of this IPO on its first day, and I'm left scratching my head. What? ARK Invest invests on innovative companies. How is that company an innovative company to fit into the ARK Invest overall strategy? To answer the question, let's hear from the Hims & Hers founder and CEO of the company.
Hims & Hers is the first consumer healthcare brand, which allows all of us around the country to pick up our phone and get access to a doctor no matter where we live. It allows us to seek treatment for things like sexual health, dermatology, anxiety or depression, and get medications we need delivered and sent to our door within a couple of days.
As it turned out, the company has started from erectile dysfunction medicine delivery, but it is now expanding into telehealth, and perhaps that's why ARK Invest invested in the company. Okay, let's summarize the pros and cons to see whether we should follow ARK's footsteps and invest in this new IPO. What's unique about Hims & Hers is that it focuses on healthcare issues that may not be easy for people to discuss with their doctors. Things like hair loss, mental health, sexual health issues, and so on. Gauging from all its investor material, it's focused on building a strong brand. Also, the company has been growing at a reasonable cost per new customer it acquires. What worries me about this stock is that it focuses too much on its brands and story. Check out their investor presentation and almost the first 20 slides. It's all about how big the market opportunity is. It's too much focus on its story. Also, to what extent it can scale and grow and compete with the inevitably growing number of retailers in this category, that's yet to be seen. What if Target and Walmart do exactly the same, and those companies already have the infrastructure required to do the same service? Also, as always, being a young company means there is a lack of operational history and profitability. Overall, it is a company worth watching and understanding a bit more. I'm adding it to my watch list for 2021. Let's turn to the losers of the day. The inevitable happened. Brokerage firms halted trading of the so-called short squeeze stocks, which fell off the cliff first, and then the restrictions are being removed gradually, and some short squeeze stocks have already started recovering from the dip in the after-hours trading. The drama is not yet over, and even politicians such as AOC and Ted Cruz are getting involved. So there will be more to hear and read about this story in the future. As always, if you like to give a StockCard VIP a try, to research as many stocks as you'd want, and follow successful investors' portfolios such as my Roll with Our CEO and Windmill Strategy portfolios, use promo code Roll with Our CEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I will see you tomorrow.